Morning, everybody. Welcome back to the Opportunistic Trader. It is November 13th, just after 10 a.m., and we're joined now by Tony Greer of TG Macro. How's it going, Tony?
Hey, Mike, how are you?
Good, good. As we spoke last time, I think when we spoke last week, the market was higher than these levels, and we were talking about maybe the market moving higher and then coming back down. We've kind of had that round trip. What are your thoughts at the moment?
We had the retracement, right? I postured to sell stocks into that hellacious rally up to 28 and a quarter or somewhere around there, and made some sales, and it turned out to be the right thing. And then you come in this week and you've got King Dollar, like acting like a wrecking ball versus, even the G7, which is interesting to me. That's like a little bit of a sea change this week. We've got the dollar sticking its chest out to a new high. And it makes sense because Europe's sort of dealing with the Italy drama right now. In Japan, the Bank of Japan's balance sheet is now as big as the economy. So I would imagine that that's kind of thematic with yen weakness. The pound continues to fail on rallies as the Brexit story sort of faces an uphill battle. Even if it gets approval, it's going to have to get a vote in parliament. And so that's sort of lending some weakness to the pound. So we're seeing a strong dollar environment. Naturally, it's going to start kicking the emerging market currencies over. And if you remember, that was sort of the tipping point for all the S&P weakness that we've seen. So I guess that's going to continue to translate this week.
Well, that's
You know,
what IMF came out yesterday and basically said similar sort of things. It's, headwinds right now in the market are potentially dollar. That's one of them is dollar and the China tension between China and US. And, they're definitely talking about the stronger dollar, especially against emerging markets.
Yeah, I mean that's part of the thing. We're pulling people back in from the insane levels of the risk curve that they participated in for the last 10 years, and so that's going to matter. The other dynamic that's just changed dramatically is that FANG stocks are demonstrating the ability to go down. I mean, Apple had a day yesterday, like one for the record books. It's cascading below the 200-day moving average this morning, and it has held the 200-day, it has held bouts with the 200-day moving average before. So it's not necessarily a sort of one and done level. I would imagine that there'll be institutions that are looking to buy it into this June 2018, this consolidation level here around 190. But still, the stocks are backing off. FANG is backing off, and that's pulling the whole tech market back in line from their insane overperformance. So I feel like that can at least translate and continue this week for sure.
As
I
we
got to.
see it, S&P now is only up a point. We're up over 20 points at one point overnight. I was talking about Home Depot, the fact that it came out with solid numbers. It was solid guidance, and it was trading up about $6 pre-market at one, or maybe $5, and now we're down two. That's something interesting to keep an eye on, just on kind of price action itself. Good news, bad price action, sort of.
It's really bad price action. It's even worse than you're describing. If I look at the Home Depot chart and I see death, like literally, like it's got a brand new blow off top around 210 that we put in September, and a straight line down in October from 210 to 170, right? Then we get a retracement rally, which is a pure market dynamic relief rally ahead of earnings, right up to the 200-day moving average where it fails. And then you get earnings and news that come out and confirm the down move. You get a huge magnitude pullback from that resistance area. I mean, below 170 in Home Depot, look out. I mean, I'm definitely ahead of myself here because it's going to have to work its way lower, et cetera, et cetera. But those are big levels, man. I mean, you've got big Dow stocks coming apart now. Goldman Sachs is getting bludgeoned with this, 1MDB story. Like you said, Home Depot, some of the other big banks are backing off quite a bit. So it's going to be interesting to see if the S&P can hold these levels. I'm nervous that below 2712, which is the first spike low in October, below there that we're going to retest 2603 and maybe 2550. I sort of am seeing the likelihood of that happen sort of increase slightly in my mind.
What do you take of the market action? Before Apple earnings, we were talking about the market was under pressure, and you were thinking if Apple comes out with bad numbers, that would just crush the market because it's just such a bellwether, it's such a high weight of the market. And the interesting thing is that Apple's now almost let's call it 16, $17 lower than where it was at the time, and the
Yeah.
market's held up. It's almost like it um, you know. Recalculated and kind of just what is holding, what it's moving. Certain things, different things have been outperforming, taking up for the FANG that the FANG has been underperforming. What's your take on that? And what healthcare at post election has been doing pretty well.
Yeah. Well, just to start, I mean, we just FANG. I mean, if we want to go back to that, they're all in pullback mode no matter what. So we've spoken about that. Facebook, a couple bucks from the lows. Apple is doing what still a continuation of this move off of earnings and their suppliers, guiding lower. And then you got the rest of them, which are just really a technical story. Netflix failed the retracement to key resistance. Google failed the retracement to key resistance. I mean, if you want to check all your boxes for a market that should systematically pull back, you can get a lot of your boxes checked this week. The stronger dollar, the weakness in emerging markets. VIX held the pullback level on the screws. I mean, right to where it should have, to the point that it was so easy. I was able to bid for freaking puts on the lows, and all of a sudden the volatility exploded from there. So it's been, it's really lockstep with everything that you would think for a market to back off. We had this high yield pullback yesterday with the bond market close,
Yep.
and that's significant to me. There's plenty of signs around here where weakness, we're having these green to red days now, which are sort of, the reverse of the trend that we've been seeing where markets come in lower and rally. We're starting to see where they have a relief bounce overnight on, hope and wishes. And then you come in and they're selling resumes. So I'm getting confident for a move lower in the S&P. I think the oil move is getting close to washed out, and I've got my other eye on that market.
This is a volatile market here, and I'm just looking at the chart. We traded down to just over 2,600 in the S&P, and then over a 7-day period worked our way back up to 2,825. So nearly 8 or 9% move back up, and now we're about 4% lower from that level. A lot of volatility out there. Tough to kind of stay in a conviction trade like for in the face of one of those moves.
Yeah, no, I mean it's been extremely interesting week.
Yeah. What about last time you were talking to us, healthcare stocks? Are there a few names in there that you like, and is it the sort of thing you think that you still like even post this election bounce?
It's really something. I was watching the healthcare stocks as a barometer for the markets, Mike, because they, we spoke about it. I think when they were a late breakout, we saw them break out again over the summer in August through their previous high of the year. And so what I was saying back then is I'm conscious that the healthcare sector is breaking out and could lend strength to this market, with this late in the year, August, September breakout. What happened was that breakout turned out to be a big fail in the S&P. The S&P backed off, but healthcare held right where it should have, with the XLV holding 200-day support. So now that healthcare has rallied back, it met up with its old October highs, and now we're sort of in a range, I think. It's one of those things. If healthcare can get up and get going again, it might, sort of slow down the slide of the S&P in a rotation. But I think healthcare can, rally now in a sort of defensive rotation where this, tech and builders and social media and market leaders like that can back off, and then we can have the late rally sectors, like healthcare and say something like aerospace and defense can sort of hold their levels. And names, and then you'll see names like consumer staples hold in there, and utilities, and the typical defensive posture of the market. So that's the only thing I'm really looking at healthcare for. I think we should talk about the oil market. I think it's
I was going to jump nat gas. I don't know if that was included in the oil. Let's start with nat gas. Just a quick question on that. Have you watched that move, and are there certain equity names that you might be playing based on that move?
Well, you naturally you're going to look to like Chesapeake when natural gas starts moving like this, and Chesapeake has a mixed has had a mixed response to it. The commodity is really, really unpredictable. It's rallying on tight supplies into cold weather, the usual sort of story. And I just look at it as a sort of added boon if I'm trying to play stocks like Conoco from the long side, which is actually not working at all at the moment. So I'm more focused on unleaded gas, to be honest with you, because it's just a more dramatic and more historic move. We're talking about, historic magnitude of this oil sell off. And it's something that, I'm more instinctually, I'm trying to lead myself to buy, as it makes the front pages of the Wall Street Journal and MSNBC and every other media publication is finally talking about oil going down. So
Right.
now I still want to see if it's going to hold this long-term trend and stick my neck out and buy some oil stocks and some gasoline ETF. So, we'll see if these things hold. It generally is the kind of thing where as long as the physical market is holding in there, the slide, which was a result of excessive speculative length, will come to a halt. And so that's how I'm playing it. But it doesn't look very good at the moment. It looks like there's another wave of selling hitting the oil markets right now. So we'll see if it holds.
Chesapeake really does not look good. I mean, it hasn't done anything on this rally here, and just no bid in Chesapeake.
No, that natural gas versus the stocks are tricky. Natural gas can go up and natural gas can double from here, man. And if they're going to sell the energy stocks, they're going to sell the energy stocks, and it's not going to matter.
Like you said, crude oil just taking another leg here. We're down at 57.80, down 3.5%, and I think this is the 12th straight down day. But not even just the 12 days. I mean, I think if we're going back only about 35 days, we're trading 77. So $20 drop in about 30 or less than 30 trading days, but it's 35-ish calendar days. It's big move there.
Yes, getting serious, man. COG is another one, Cabot Oil and Gas. I mean, that's finally seen a good move. That stock consolidated around $24 and saw a nice bounce to 26 and a half with this move in natural gas. Like I said, it doesn't give me that the charts and the dynamic between natural gas and the sort of stocks that are exposed to them isn't a good enough risk reward for me, and it's not a direct enough exposure for me to sort of play natural gas. So
Yeah.
I've been burned too many times in that commodity, so I tend to stick to my knitting.
Well, look, nat gas on the other side of the equation has just gone from $3 to $4 in I mean, really gone from 330 to 4 in 7 trading days, but it's just about 20 days ago that we are trading below $3. So big move there. A lot
Yeah.
of speculation on what's causing that one, but yeah, crude oil, which is the bigger contract and the more widely traded contract, yeah, definitely a lot of pain there.
We'll
Down
see.
three and a
Maybe
half
it'll be a
percent.
turnaround Tuesday where it carves a new low, and then we see a headline comes out of Saudi Arabia. I mean, they're kicking around a cut. I would imagine if this slide gets much steeper, that they're going to come out and announce an actual cut. So you got to have your head on a swivel in the oil market here.
Yeah, I think a lot of participants are looking for, and also we have options expiration as well this week, December, and so that's something people are talking about. But yeah, one of those days where we're actually lower and then move higher. And the theme of the past few days or the past downtrend has been that we've been higher overnight and then we trade lower in the U.S. session. So far we're seeing that price action, but that'll definitely interest there.
Yep.
Anything on the agricultural side that you look at, or anything piquing your interest there?
Well, I mean, it's a trade war trade. Wheat had a great rally, a really nice rally, I guess, yesterday, and corn is following, but nothing has really broken range to me. So I'm not touching anything in agriculture, not on the grain side, certainly. The softs, coffee and cocoa are just a play off the Brazilian real. So I'd rather trade the real. The chart is much better than the commodities. And that's it. There's just too much opportunity in the oil market right now to look at grains for me.
Yeah, no, that's a good point as well. It's like you got so much firepower, put it where you really convicted, and grains right now isn't a huge trade right there. Moment.
Yep.
All right. Well, hey, Tony Greer, TG Macro. Really appreciate the information. A lot of great information. You can check out Tony's site, tgmacro.com. A lot of great information there as well on the macro markets. Tony, a lot of volatility out there. Thanks for keeping us updated, and we'll talk later in the week, hopefully.
Yeah, anytime. Good luck out there, guys.
All
Make
right.
money.
Talk to you later.